Hey guys, what's up, how's it going? My name is Robin. Welcome back for another video. In today's video, I'm going to be showing you guys which Canadian stocks I'm adding inside my portfolio, as well as give you guys an update on how my portfolio has been doing since we started it over the past 15 months on this channel. So if you guys are brand new to the channel, if you just need a quick little refresher, the goal of this portfolio and the goal of this channel is to basically show you guys how easy it is to invest in a long-term solid dividend stocks. And the key strategy here is to just regularly put money into the market, no matter what the market is doing. If the stock market is going up, then we keep putting money in. If the stock market is going down, we just keep putting money in on a regular basis, and those earnings will compound and grow. And since we're investing in good solid companies and stocks, these companies just grow over time, and we can feel good about that. And that's pretty much the basics of the strategy. Now, I know it can be pretty simple, but one of the things that beginners really struggle with is understanding this idea that the stock market will grow over time, and just kind of having the patience and just seeing it happen. So on this channel, what I do is I basically showcase to you guys, especially for beginners, I show you guys how this kind of works, and I give you guys that example, and I show you guys my stocks, and I show you guys how we've been managed to basically grow this money over time, so you can actually visually see it. And it's something that really helps when you can see this kind of grow, and when you can see somebody's portfolio, we can see the results. So that's basically the main reason why I do these videos. Alright, so before we go any further, we'll do a quick little jump inside the portfolio. I'll give you guys an update on how our stocks are doing this Friday morning, and then what I'll be showcasing you guys is what stocks I'm actually buying today. So if you guys enjoyed this video and you guys want to support the channel, please sure to give it a big thumbs up, and I'll put my affiliate links in the description of this video if you guys want to support the channel and sign up to Wolf Simple Trade. Alright guys, what's up, how's it going? We're inside our portfolio here. Here's the TFSA on Wolf Simple Trade. So give you guys a quick little update on how the portfolio is going over the past couple days, because the markets have been rising quite a bit, and we've seen some pretty consistent growth inside the portfolio. So we have $24,000, $316 inside our TFSA, currently up 12% all time. Over the past day, our portfolio is up just under 1%, which is $119. So today it's Friday, March 12th. So we opened up at a decent jump again, and the markets have been up quite a bit over the past week. Our entire portfolio is up 4%, which is about $900, which is pretty cool. Over the past month, we're up 5%, which is about $1,300. So once again, nice little gains to start the year. Past 3 months, we're up 8%, which is really good for 2021. We'll have to wait and see if that that growth is going to keep coming as time goes on. But I'm predicting it probably will for at least a little bit, but we'll have to wait and see. And over the past year and all time, our portfolio is currently up about 12 to 13%. So $2,661 and mostly in stock appreciation, but also in some dividends. And towards the end of the video, I'll show you guys like how much of that is dividend income and how much is stock appreciation. So that'll be towards the end of the video. Now, I did record this video earlier, but I happened to not actually record it. So unfortunately, guys, I'm not going to show you guys what stocks I'm buying because I already bought them, but I'll just give you guys a quick little overview of what I actually bought here, which will be more or less the same thing. So the first stock I talked about was Algonquin Power and Utilities. This is a company that long-term growth, Canadian-based utilities and power company. I've owned this company for quite a while, and I've been looking to buy it. And right now, the stock is currently down about 10% over the past month, and it's got a little bit of recovery, but it's still down 10% over the past month. This is a really good company, and I think now is just a perfect time to buy. It doesn't really matter if it continues to go down or if it goes up. This is a company that will just grow over time, as history has shown. Over the past 5 years, this company is up 81%. So when you see a company like this that's growing, increasing their revenues, doing well, and they get a little bit of a dip, that means buy, because they'll eventually recover, and you'll get a nice little gain here, as you guys can see from this past 5-year chart. But it basically, if you look at Algonquin Power and Utilities' complete history, they're just going straight up. So really good company, really worth investing into. So I bought a couple shares today. I bought $100 worth of Algonquin Power and Utilities, which brings us to 36 shares inside the portfolio, $700 total value, and we're currently down about 5%, but over time that will definitely grow. So the second stock I ended up buying today was a growth-based stock inside this portfolio. I wanted to pick up a few more shares, and that was Severia Corp. So Severia Corp is a healthcare accessibility company. They make products and services, and they focus on that kind of stuff for the elderly, the disabled, that kind of thing. This is a growth-based stock from Canada. They do own a monthly dividend, and they are currently kind of in that growing phase, but they have been growing their dividends. So it's a nice little growth-based like dividend company that's coming up kind of thing. And they're currently trading at $17.37 Canadian. Over the past week, this company is up 1%. Over the past 1 month, it's up 5%. Over the past 3 months, it's up 25%. Over the past year, it's up 90%. over the past 5 years, it's up 173%. So this is a really good growth-based company. I didn't buy too many shares because I don't want to go too crazy with it, but this is kind of like more of like my riskier stocks because it is an individual company. But so I just bought $50 of this today, and we currently own about 21 shares, which is $364, and we're currently up 11 to 12%, I guess, which is pretty good return, and they have a yield of 2.69%, so not bad yield either, considering the growth and whatnot. So this is definitely a company to look forward to. I'm not going super crazy with it, but I do think it does have some potential going into the future. So I definitely wanted to pick up more shares of that because I actually don't own that many inside the portfolio, so I just grabbed some today. And the other thing I kind of put some money towards was, once again, the ETFs. We have 2 ETFs inside this portfolio, the 2 big ones, which is VDY for our Canadian stocks, and then VFV. And what I recommended earlier, guys, was that if you're ever a beginner investor and you want to learn how to invest, basically what you want to do is, let's say you have $200 to invest today, take $150 of that, stick it into an ETF, take the other $50, stick it in an individual stock, and let's say a week later you have $500, put $400 into an ETF, put $100 into an individual stock you want to buy, and that's kind of a good approach to do it. Just make sure, once again, you're researching your individual stocks. The ETFs, you don't need to research too much as long as they have like a low fee and they have consistent returns and there's good quality stocks inside them. But just look at the history and whatnot. If you can see that the ETF has performed well, it's probably a good ETF to invest into. So that's a good approach to do. That way you're buying into the overall market and your portfolio is going to be guaranteed to grow. And maybe your individual stocks do good, maybe they don't, but at least the ETFs do well. And the one I bought today was VFV because the S&P 500 has been a little bit down, but the U.S. economy is kind of always growing no matter what, so we should see that bounce back up. So we bought, I think it was about $100 of VFV, which brings us a total of 69 shares, $6,000, and 2.58% growth inside this ETF. We just started buying this over the past couple months, so it just goes to show you how the U.S. markets are just always constantly growing. So that's the ETF I bought today. But any other than that, guys, you can pretty much buy any of these good companies today. I just kind of went with some of the ones that were kind of got hit a little bit, which is Algonquin, Pound Utilities. And once again, I wanted to pick up more shares of Corp. So that's pretty much it for most of my buys today. Otherwise, we're going to jump inside the dividend income sheet, and I'll show you guys how much dividend income our portfolio has been making us. So here's a quick little dividend income update for the portfolio. So it's March, like I mentioned, it's 15th month of the portfolio. We started it way back in January of 2020, and as you guys can see, this is the monthly dividends here, and it's just been constantly growing over time, and we currently are at $46 already for the month of March, and we finished February at just under $50. So a portfolio, give or take, is making us about $50 a month, so not too shabby in dividends, and total dividend income so far has been $402. So out of the 2,000 and I think it was like 600 or something that I showed you guys earlier, $400 of that is dividend income. But those dividends will start to compound and grow. As you guys can see, just a year later, earlier we were making about a couple bucks. We're now making about $50 a month per dividend. So it does add up over time very slowly, but once you get that ball rolling, it does make a big difference. And one of the things I like to do inside this portfolio is show you guys how your dividends can help you out. So one of the things I like to do is I made this cool little spreadsheet where it showed kind of like just role playing. Imagine as if I was to live off my dividends. This is some of the things they could buy me. I'm not actually doing that. I'm actually reinvesting my dividend income, but I'm just using this just to kind of have fun and keep me going and make things interesting. So one of the big things I like to do is I take 20% of my dividend income every month and I like to put it towards groceries. So I went to the store earlier and I bought about $10 worth of groceries to kind of just, once again, kind of encourage myself to keep going and just show that, over time, dividend investing does make your life easier. So I hope you guys enjoy that little video there that I took, and hopefully it just inspires you guys to keep doing the dividend investing, because I know it can be a little bit boring at times. Alright guys, that's it for this video. Hope you guys enjoyed it. Once again, if you guys did enjoy the video, please sure to give it a big thumbs up and leave a comment if you guys have any questions or anything like that. I'll try to get back to you as soon as possible. And if you guys want to watch more content from me, I'll put a link to some end screens here that you guys can check out. And check the description of this video. I do have links to things like the Patreon, Discord, for anybody who wants to get more in touch and ask more questions with me and support the channel further. So I hope you guys enjoyed this video. Take care, and I'll see you guys later.